A divided U.S. House of Representatives passed a bill to suspend the $31.4 trillion debt ceiling with majority support from both Democrats and Republicans to overcome oppositions led by hardline conservatives and avoid a catastrophic default.
The Republican-controlled House voted 314 against 117 to send the legislation to the Senate, which must enact the measure and get it to the President Joe Biden's desk before a Monday deadline, when the federal government is expected to run out of money to pay its bills, Reuters reported from Washington early on Thursday, Indonesian Times. This agreement is good news for the American people and the American economy, Biden said after the vote. Biden urged the Senate to pass it as quickly as possible so that it can be soon signed into law. The measure, a compromise between Biden and House Speaker Kevin McCarthy, drew opposition from 71 hardline Republicans. That would normally be enough to block partisan legislation, but 165 Democrats, more than the 149 Republicans who voted for it, backed the measure and pushed it through. The legislation temporarily removes the federal government's borrowing limit through January 1st, 2025. The timeline allows Biden and Congress to set aside the politically risky issue until after the November 2024 presidential election.
I think he negotiated with me in good faith. He kept his word. He said what he would do.
And so what are the implications of those decisions for global economy, especially its implications for Indonesia? Now joining us, head of the Center for Macroeconomic Policy and Fiscal Policy Agency, Ministry of Finance, Abdur Rahman. Good afternoon, and how are you, Pak Abdur Rahman? We see that... Yes, the U.S. House of Representatives has finally agreed to suspend the debt ceiling, and we know this is a good news also for America, and the agreement prevents the U.S. from debt default, which could further add the global uncertainties. And now, in your opinion, what will be the impact for Indonesia economy?
Thank you for the question. The suspension of the U.S. debt ceiling and the avoidance of the debt default would bring some immediate relief and stability to global financial markets, including Indonesia. There are three possible channels through which we can explain the implication to the emerging economies, including Indonesia. First, the market confidence. The agreement to suspend the debt ceiling will help restore market confidence and reduce uncertainty. This will lead to a more possible sentiment among investors, potentially reducing capital outflow from emerging markets like Indonesia. As market confidence improves, it can support the stability of Indonesia's currency and financial markets. And currently, most of G20 and Asian countries are experiencing currency depreciation against US dollar, with Indonesia among the exception. So last year, our currency appreciated by 5.7%. This year to date from January to May. So I think our currency is quite strong. And the second channel, trade and investment. So avoiding a debt default in the US can help prevent a significant slowdown and recession in the US economy. This can be beneficial to Indonesia as well as to the emerging economies. Our export to the US is around 10% of our total export. So this is the second largest export destination from Indonesia, mainly textile product and footwear. So relatively stable US economy may support a demand for Indonesian export and also attract foreign investment to Indonesia. The third channel through commodity prices, so with the avoidance of the debt default in the US, can contribute to overall global economic stability as well as economic performance. So with a stronger global economic performance, especially in the US, it will increase the demand for our this. Indonesia is the major exporters for commodities such as coal, palm oil, rubber, nickel, as well as copper. So it will increase the commodity price when the U.S. Economy getting stronger. And lastly is the funding cost. So the U.S. debt ceiling decision can also influence global interest rate and borrowing costs. With more stable or even declining global interest rate, it will reduce the borrowing cost. Yeah, so the bond yield of Indonesia will stabilize. And if we look at the development, actually, we see the declining trend of the Indonesian bond yield.
Okay, so the suspensions of the debt ceiling should ease the uncertainties in the global financial market. You also mentioned earlier about the market confidence. So are we confident actually with that rupiah will be benefited from such more disencouraging conditions?
Yeah, I believe it will definitely bring a more stable and in the financial market. On the stock market, last year actually Indonesia stock market is among the top performers, yeah, among the emerging market. So our Jakarta Composite Index rose to 4.1%. This is amid the very challenging situation last year with the Russia-Ukraine war. While if we look at other emerging economies in the G20, so we usually compare it with the G20, we are quite a lot better than the EMs in the G20. However, in the last few months, we see GCI was slightly under pressure. So expect.
Mr. Abdul Rahman.
So, yeah.
Yes, please continue.
Yeah. So yeah, on the currency, rupiah is also among the most resilient currencies among the emerging economies. Rupiah is only depreciated slightly by 3.9% on average. The year-to-date movement also, we see the appreciating trend of the rupiah. So with the improved global financial market sentiment, it will contribute to a more favorable environment for the emerging economies, including Indonesia. With higher confidence and risk appetite, we can expect larger capital inflow as well. So in the last 4 months, January to May, almost 5 months. So we see a capital inflow around 20.6 trillion in the stock market, while in the bond market, 67.8 trillion. I think this is quite strong for our capital market. So 10-year government bond yield have also declined from 6.9% at the beginning of the year to currently only 6.4%. So this is the very encouraging trend, the declining of the cost of fund for the Indonesia.
Okay, despite the suspensions of this debt ceiling, economic experts are still worried. So there are still these worries about an imminent recessions in the U.S. And what is the impact of the U.S. imminent recessions on Indonesia?
Yeah, again, there are 3 possible channels through which the imminent recession in the U.S. could affect Indonesian economy. First, trade and exports. The U.S., as I mentioned earlier, is the second largest our trade partner. Around 10% of our export goes to USA, and only slightly below the second largest after China. China contributes around 20% of our total export. The FDI from the USA also sizable. Thus, the recession in the US would reduce consumer spending and also business investment, resulting the lower demand for import, including goods from Indonesia. So the collapse of the US, if it happens, will have a negative impact to Indonesian export, and in turn also could lead to job losses in several sectors. Second, the capital outflows and investor sentiment. So during the time of economic uncertainty and recession, investors usually become more risk averse and seek safer investment option, usually to safe haven assets in many advanced economies. This may lead to capital outflows from emerging markets, including Indonesia. So the outflow of foreign investment can put pressure on the currency. It can also increase borrowing costs for Indonesia companies and the government. Third, commodity prices again, with the weaker economic condition in US, it will reduce their demand for global commodities. Also lead to lower commodity prices for Indonesia, that also lower our export earning. That's possible channel that can explain the possible effect of imminent recession, but also Indonesia with the very strong domestic demand, as well as now currently there is a shifting on the export destination. Our export to India, this is I think the most strongest performance in the world currently, exceeding China. Also, we see increasing trend of our export. So this is a bright spot for Indonesia, as well as ASEAN. Our neighboring countries in the ASEAN also performing quite well in 2023 and considered to be quite resilient this year.
All right. Now, in line with the dollarizations trends in the world, ASEAN has also agreed to further push for the use of the local currencies. And do you think such initiative can help reduce the risk and fluctuations associated with the US dollar?
Okay, actually, maybe we can expand it to include the ASEAN Plus 3, because our discussion usually with ASEAN Plus 3 as well, China, Japan, and also Korea. If we look at the current trend, actually the usage of China's currency also increasing, particularly after the war in Ukraine. So the trade between Russia and China now is using the local currency. And within the ASEAN, actually, there is also strong initiative to push this initiative. So the initiative pushing the use of local currency, we call it local currency transaction. That's our initiative. Actually, can potentially reduce the risk and also fluctuation associated with the US dollar. Here are some consideration. First, the diversification of currency reserve with this initiative. By promoting the use of local currencies within the ASEAN region, member countries can diversify their currency reserves. Currently, many countries hold a significant portion of their reserve in US dollar, making them quite vulnerable to fluctuation in the value of the dollar. Diversifying the reserve can help mitigate this risk and reduce dependency on single currency. Second, it will reduce the exchange rate risk. So when trade and financial transactions within the region are conducted in local currencies, it can help mitigate the exchange rate risk. Fluctuation in the US dollar also can have a significant impact on the cost of import and export, affecting trade competitiveness as well as economic stability. So using local currency for regional transaction can reduce this risk by eliminating the need for constant currency conversions. Third, increase regional trade investment. The use of local currencies can facilitate increased trade and investment within the ASEAN region. And this is, I think, the main goal of this initiative. When businesses can transact in their own currencies, it reduces complexity and costs associated with currency conversion and hedging against exchange rate fluctuation. Actually, Bank Indonesia also initiated to have a single payment system as well using the QRIs that I think already operated in several countries such as in Thailand, in Malaysia. We can use the QR code to make a transaction.
Okay. Mr. Abdul Rahman, head of the Center for Macroeconomic Policy, Fiscal Policy Agency, Ministry of Finance. Thank you very much for spending your time with us and sharing with us. Thank you very much. Good afternoon.
Thank you very much.